Hello friends, we are MoneyDhan, your SEBI registered investment advisory firm who focuses on financial planning, cash flow management, monthly expense planner, and the guys who are your personal investment advisors. Whenever you have a capital and if this capital is parked in a bank which pays you a fixed interest on a per month basis, that is the interest withdrawal plan from the bank's fixed deposit. When the same amount is parked in some capital appreciation asset like mutual funds, then you may give an standing instruction to that mutual fund, asking them to credit a fixed amount every month. That should get credited automatically to your bank account. This system of withdrawal from mutual fund in a pre-planned manner is popularly called Systematic Investment Plan (SWP). A client had to pay 30,000 EMI to the bank every month. Loan tenure or loan repayment schedule was for 20 years. We asked him to keep paying EMI and also we burdened him with an additional 30,000 SIP into equity-linked mutual funds. Don't worry, he had the bandwidth to commit 60,000 per month. His annual salary hikes helped as well. Now there is a strategy. This 30,000 SIP, which grows at 12% compounding per year, grows into a large amount of 50 lakh in 8 years. Once 50 lakh corpus was attained, we stopped the SIP and started the SWP, Systematic Withdrawal Plan. Here the client starts to withdraw 30,000 per month from the 50 lakh capital, which he accumulated over the past 8 years. He had two commitments for 8 years. One was bank loans EMI of 30,000 per month. Second was a SIP of 30,000. After 8 years, since SWP started, his 30,000 SIP obligation stopped. Also, in addition to that, we recommended him to stop paying EMI to bank out of his salary and divert this 30,000 received from SWP as EMI to bank. So, in 8 years, we helped the client in erecting up a 50 lakh corpus. Then we appointed that 50 lakh corpus to handle the bank loan EMI task forever, thus giving relief on the client's monthly salary. He could use this freedom to pay for his next goal like retirement plans or child's education or any other aspiration he must have. Out of 20 years, client took the hard route for 8 years, but for the next 12 years, his EMI keeps getting paid from the SWP plan. So now you know how we can use SWP. Let's get some theoretical know how about this systematic withdrawal plan. When you talk about systematic withdrawal plan, first of all, the upsetting fact is that you are selling units of mutual funds. These units have prices known as NAV, net asset value. There is some basic math involved which you would understand only with an Excel table as example. In screen, look at the data table. Let us say this is April month. You have certain mutual fund holdings. Each unit of this MF has a price of rupees 500 as NAV. By May month, this NAV has gone up in value till 505. In June, it is 510 and 515 in July. Then after a drop in market value, August NAV per unit of mutual fund is 504. Finally, in data, last row is September where NAV is below 500 and valued at 496. Check out April month row, the second last column with the title number of units. At 500 per unit value, assume you own 6,000 units of mutual fund. To find its rupee value, you must multiply 500 rupees value per unit with the total number of units, that is 6,000. This gives you an answer of 30 lakh rupees. It's May month. Time for mutual fund company to sell some units and send 20,000 rupees as your systematic withdrawal plan. For this needful 20,000 rupees, mutual fund manager will sell off 39.604 units. We find this value by taking the 20,000 you need and divide it by 505 per unit value of mutual fund. This gives us the number of units that must be sold to get 20,000 rupees. You need to notice this anomaly. From 30 lakh rupees, you have taken out 20,000 rupees, and yet the final amount, which should be less than 30 lakh, is still reflecting 30 lakh 10,000 for May month. This is because between April and May month, 500 per unit became 505 per unit. This increase in value per unit caused a good profit of 30,000 to your mutual fund holdings. And from 30,000 profit you withdraw 20,000, thus allowing that remaining 10,000 to add up with 30 lakh existing capital. However, your value in rupees might have increased, but those 6,000 units reduced by 39.6 units, and the units will definitely come down till 5,960.396. Moving on, it's June. Per unit price of NAV went up from 505 to 510 now, and final amount is 30 lakh 90,802 rupees. Again, 20,000 is getting credit to your bank account as per SWP instruction. For this, they sold the units. 20,000 rupees divided by per unit value of 510 gives 39.216 units to be sold. Thus remaining unit count is 5,921.180. The final value will still be at an all-time new high even after withdrawing the amount. This is all because the NAV value per unit is outgrowing the SWP amount you withdraw. Speeding up. Look at the last row of September month where MF lost value below 500 and now the per unit NAV value stands at 496. Still, you did get paid 20,000. But this time, the money came out of your invested capital of 30 lakhs and not from the profit earned, which was the case when per unit price was going up in previous months. Final value is less than 30 lakhs now. SWP has cost 5 times 20,000 as withdrawal, and then due to market downfall, the NAV value took a hit as well, thus leaving you with the final amount as 20,77,961. Since the per unit NAV was at 496, the number of units sold was higher at 40.323. I guess now you know SWP means your holding units will reduce. Your payout might be from profits or from the invested capital itself. You need to be careful in how much SWP you ask for. You do not want to dry the well by drawing too much water as SWP. SIP, Systematic Investment Plan, is a method to accumulate wealth, while SWP, Systematic Withdrawal Plan, works in reverse. It represents postponed consumption. While most of us focus on investing, it's equally important to plan for the later stage, withdrawing the money systematically and wisely. It's crucial to understand that investment returns are not linear. You cannot expect consistent growth of 10 to 12% every year. For example, if you had planned an SWP in 2008, just before the 60% crash due to the global financial crisis, at those times it would be a huge mistake to expect a steady 12% return that funds your SWP requirement. The market crash that followed would have been a nightmare. Your capital could have been slashed by 60%, thus derailing your entire plan. This historical evidence highlights why careful planning of your SWP allocation is essential. Key considerations for SWP planning. Capital and withdrawal rate. If your withdrawal rate is 10% of your capital, you cannot afford to take aggressive risks by investing heavily in equity. However, if your capital is substantial and your withdrawal rate is a modest 4%, earning a return of 10% on your investment could allow for a more aggressive equity allocation, as your capital would still grow despite withdrawals. In short, ask less amount as SWP payout and thus give the existing capital some bandwidth to take risk. This bandwidth to take risk can give that corpus an opportunity to earn higher returns. It's possible only if you withdraw a modest amount as SWP. No fixed rules. There isn't a one size fits all strategy for SWP allocation. Instead, your approach should align with your financial goals, risk tolerance, and market conditions. Suggested strategy: focus on building capital first. When planning withdrawals, allocate at least 30% of your capital to equity for potential growth. Aim to keep your withdrawal rate between 4% and 6% to maintain the longevity of your funds. By balancing your capital, withdrawal rate, and fund allocation, you can ensure your SWP strategy supports your financial needs without exposing you to unnecessary risk. Knowledge is easily available to you nowadays, but your actions using the money will have real consequences on your future life. Therefore, it is always better to hire a SEBI registered investment advisors as consultants. Our name is MoneyDhan.com. We would like to volunteer and give you consultation for the same.